Imagine getting hit with CRA penalties not because you tried to avoid taxes, but because you misunderstood one small number on your account statement. That's what happened to Michael Callahan, a taxpayer who ended up in court after over contributing to his TFSA. And what's most surprising is how easily this could happen to anyone. Hi, I am Amandeep Singh, CPA and founder of Cloudiverse CPAs in Burnaby. At Cloudiverse, we help individuals and business owners find their way through the complex Canadian tax system, just like Google Maps guides you through a maze of roads. Let's talk about what happened in this case. Michael had a tax-free savings account, or TFSA. It's a special type of investment account that allows Canadians to earn interest, dividends, or capital gains without paying tax on that income. But there's a catch. You can only put in a limited amount each year, known as your contribution limit. You see, that limit changes over time. For example, in 2019, it was 6,000, and by 2023, it's gone up to 6,500. It's like that. So CRA keeps track of how much room you have left, and you can see it online by logging into my account on the CRA website. Now, here's where things went wrong for Michael. He got a CRA statement that said his TFSA room was 5,000, a negative number in brackets. He thought this meant he could still add another 5,000, but in CRA language, the brackets meant he had already gone over his limit by $5,000. It's kind of unbelievable. Then when the annual limit went up to 6,000 the next year, he added that too, unknowingly pushing his over contribution to 6,000 plus 5,000, that is 11,000. When CRA noticed, they sent him a notice of assessment, charging a 1% per month penalty on the extra amount, plus, of course, interest. And as soon as he found out, he took the extra money out and explained this was an honest mistake and that he did not have an accounting background and misunderstood the brackets. He asked CRA to cancel the penalties, but they refused. So he appealed directly to the Tax Court of Canada, believing that it was his right to go there, especially since the CRA employee had told him over the phone. At the hearing, he brought up the Taxpayer Bill of Rights, which mentions the tax code, and even a cited newspaper article showing that CRA gives wrong answers to taxpayer nearly 30% of the time. The judge, however, explained that while his situation was understandable, the tax code did not have the legal power to even hear this case. Here's why. The rules that allow CRA to cancel penalties and interest, called taxpayer relief provisions, give that power only to the Minister of National Revenue. If CRA refuses to waive a penalty, the appeal must go to the federal court and not the tax court. In Michael's case, CRA had even sent him a letter with a link that said if you disagree with your decision, you can apply to the federal court within 30 days. But because he did not follow that process, the tax court said it could not even hear his appeal. The judge also noted that even though he used the word dispute in his letter to the CRA, that was not considered a formal notice of objection, so the court had to, unfortunately, quash his appeal. In simple terms, the judge said the tax court can only deal with the math of an assessment, whether the amount of tax is wrong. But when it comes to fairness, like asking CRA to forgive a penalty, only the federal court can review that. The judge sympathized with him, but explained that the Taxpayer Bill of Rights is more of a promise of good service, not a law that overrides tax rules. So, what can you learn from this case? First, always check your TFSA contribution room on the CRA website before adding money. If you see a negative number, it means you've already gone over your limit. Second, if CRA denies your request to cancel penalties or interest, the next step is to go to the federal court, not the tax court. Third, don't rely solely on what a CRA agent says over the phone. Always double check what's written in their letters or talk to a qualified tax professional, a CPA or a tax lawyer. At Cloudiverse CPAs, we help our clients avoid these kind of situations. We explain how CRA limits work. We track contributions and investment issues as part of your overall tax plan. And we help you communicate with CRA properly so you don't end up appealing to the wrong court. Think of us as your Google Maps for tax and accounting, guiding you clearly and confidently so you can focus on growing your wealth and your business. I'm Amandeep Singh, CPA. Thanks for watching, and I'll see you in my next video. Until then, bye.